July 28, 2026. South Korea's stock market, one of the biggest on Earth, falls almost 11% in a single day. Trading freezes mid-morning, because the selling is too fast for the system. And here is the number nobody can quite process. In July alone, about $1.4 trillion of value evaporated from this market, roughly a full year of Korea's economic output, gone in 1 month. 6 weeks ago, this was the best performing market in the world. It doubled in 6 months, then lost a third of itself in 25 trading days. And the main character of this story isn't a company. It's borrowed money. It wasn't one bad day, it was a drumbeat. June 8, minus 10%, trading halted. June 23, minus 10 again, the day traders now call Black Tuesday. July 13, minus 9, after missiles flew near the Strait of Hormuz. And July 28, today, as we film this, almost 11% down, the fourth worst day in this market's entire history. Korea's exchange has an emergency brake that stops all trading for 20 minutes. In the 26 years before this one, it was pulled 6 times. In 2026 alone, 8 times, and counting. Welcome to MetaCortex, where we explain technology and money, and how they shape your investments. The ground rule, as always, we explain how things work. We never tell you what to buy or sell, and we make no predictions. Nobody honestly can. One more promise for today. This story is wrapped in jargon. Margin, leverage, rebalancing, unrealized gains. Every time one of those words shows up, we'll stop and explain it like you've never opened a trading app. Because in this crash, the jargon isn't decoration. The jargon is the story. First, the rise. The crash makes no sense without it. Through late 2025 and into this year, Korea's market went vertical. A new government pushed reforms to make companies reward shareholders, and Korea builds the one thing the AI boom cannot exist without: memory chips. When the new president took office, the index sat near 2,800. By January, 4,300. By June 19, over 9,100, more than doubled in 6 months. They called it the Mad Bull. 25 trading days later, it was back at 6,000. A third of the entire market, gone. Now the first thing to truly understand, this market is really 2 companies wearing an index as a coat. Samsung Electronics and SK hynix, the world's dominant memory chip makers, grew to roughly half the market's entire value. SK hynix rose about tenfold during the rally. So Korea's index is, functionally, one concentrated bet on AI memory. When those 2 fall, the whole country's market falls with them. And when foreign investors dumped a record $113 billion of Korean stock this year, 90% of it was just those 2 names. Time for the first jargon stop. Margin. Say you have $10,000, and you're certain Samsung is going up. Your broker offers a deal. Put in your 10, and we'll lend you 15 more. Now 25,000 is working for you. If the stock rises 20%, you don't make 20, you make 50. That's leverage, a loan that multiplies your wins. But it multiplies losses the same way, and this loan comes with a babysitter. The broker rechecks your account every single day. The rule in Korea: your account must stay worth at least 140% of the loan. Slip under that line, and you get the call every trader dreads: add money by tomorrow, or we sell. And if they sell, they don't wait for a good price. Your shares are dumped at the next morning's opening auction, priced as low as it takes to guarantee the sale. You don't choose the price. You don't choose the time. And Koreans took that deal at a scale nobody had ever seen. The nation's total margin debt, money borrowed to buy stocks, end of last year, about $19 billion. By late June, a record $26 billion, up over 40% in 6 months, a third of it riding on just Samsung and SK hynix. Then the crash hit, and the machine ran in reverse. By late July the pile was down to $22 billion, not because people chose to repay their loans, but because, as you're about to see, the loans closed themselves. There was one more accelerant. 6 weeks before the peak, brokers launched a new toy. Funds that double the daily move of a single stock. Samsung up 3%? You're up 6. Samsung down 14? Like today? You're down 28. Koreans poured over $9 billion into these products in 2 months. Some sold out on launch day. The biggest one has since lost 45%, and the government has now banned new ones entirely. So, a market at record highs, floating on record debt. Now 3 dominoes tip it over. Domino 1, June 23. Ruling party lawmakers float the idea of taxing unrealized gains, profits that exist only on paper. Jargon stop. Picture your apartment. You bought it for $500,000. The market now says it's worth $800,000. You haven't sold. You don't have $300,000 in cash. You have the same apartment. This tax sends you a bill on that paper profit anyway. And if you don't have the cash, You sell the asset, just to pay the tax on owning it. 14 million Korean investors did that math simultaneously. It was never even a bill, just words at a forum. The market fell 10% that day. Domino 2. The National Pension Fund, the retirement savings of nearly every working Korean. $1.3 trillion. One of the largest pools of money on the planet. A fund that size runs on rules, not vibes, and one rule caps Korean stocks at roughly 29% of the fund. Think of it as a thermostat. When stocks rally, the stock slice swells past its limit, and the fund must sell, automatically, until the slice fits again. The thermostat has no opinions. The market had doubled, so the overshoot was enormous. Analysts estimated up to $50 billion of selling might be required. And the fund's rebalancing had been paused for 6 months, scheduled to restart on July 1st. A poker table where the biggest stack announces, in advance, the exact date he starts selling. What does everyone else do? They don't wait. Domino 3 is the machine itself, the doom loop. Prices fall. Leveraged accounts slip below the 140 line. Brokers force sell at the open. That selling pushes prices lower, which drags fresh accounts below the line, ready for tomorrow. Every down day automatically manufactures the next morning's sellers, at 9 a.m. sharp. In June alone, over $700 million of shares were force sold this way. Then fate piled on. Missiles near the Strait of Hormuz spiked oil prices, and a report that China can now build advanced chip-making machines struck directly at Korea's crown jewels. Every domino was down. Now the human scale. Korea has 51 million people. About 14.5 million of them own stocks, 1 in 4, from students to grandmothers. This is a nation of investors, and most of the new ones had never seen a real crash. By mid-July, by Goldman Sachs' estimate, over 1.2 million accounts had received a margin call. That's roughly 1 in 12 investors in the country. Think of your family group chat. Statistically, someone in it got the call. And more than 300,000 accounts didn't survive it, sold out automatically, at the worst prices of the year. Does this reach a portfolio in New York, or yours? Here's the honest answer. America's broad market barely flinched. The S&P 500 still sits near its record, but the chip world moved in lockstep. The main U.S. semiconductor index is down about 20% from its June peak, and on Korea's worst nights, Micron and Nvidia were falling before New York even woke up. Why? Samsung and SK Hynix supply the memory inside every AI data center, so when they crash, markets read it as a verdict on the entire AI trade. Korea is the leveraged, triple volatility version of the same bet the Nasdaq is making. And the strangest twist, Korean retail investors responded to their own crash by buying more American stocks. They already hold over $200 billion worth. The ants, as Korea calls its retail army, don't retreat. They redeploy. Where does this land in the record books? On screen, the worst single days in this market's history. 2 of the 5 worst days ever now belong to 2026, and July was the worst month Korean stocks have ever had. Fear levels touched heights last seen in the 2008 global crisis. And yet, the strangest fact of all, after the fall, Korean stocks trade near 6 times next year's expected profits. On that measure, cheaper than the bottom of 2008, historic panic and historic bargain, on the same screen. So what now? The professionals aren't just split, they're split by a factor of 2. Goldman Sachs keeps a target near 12,000, nearly double today's level, on the case that the AI earnings are real and Korea is now absurdly cheap. JP Morgan's bull case, 10,000. Morgan Stanley's base case, 6,500, basically, going nowhere for a while. The bears point at leverage still unwinding, a pension fund still selling, and China closing the chip gap. When the smartest money on earth disagrees by that much, anyone who sounds certain is selling something. We don't do predictions here, we do mechanics, and now you know exactly how this machine works. None of this tells you to buy Korea, or to avoid it, that call is always yours. But the next time a market melts down and the headlines are pure panic, remember the machine you just watched? Leverage builds the rocket, and leverage builds the crash. Subscribe, there's a lot more the market isn't telling you.